Good afternoon, everybody. Welcome to your Friday edition of the TraderMerlin Show. It is the weekend trading wrap-up. An exciting week, so much going on. Not quite what I expected. I actually thought we'd see a higher inflation reading today, but we did not get that one. We'll talk about that here at length. Today, thank you, Carrie, for the Suntory Toki Japanese whiskey, established 1923. All right. Sounds pretty good. That's what we're drinking today because it's been a good trading week. Had a couple smaller losers. On the other hand, I had some pretty nice winners, which made for a great week. So cheers, everybody. Hope you had a good trading week as well. Japanese whiskey is so different than like a bourbon or scotch. All right, let's do this. Let's get rolling. My graphic for today, I said, show me a trading floor with a lot of exuberance and happy people for our 905th show here on the Trader Merlin program. A lot of excitement. Things looking really good out there with the equity markets. Most of it positive across the board. And later on, I'll go into each of the different market segments as we usually do, go through the top 8. And I'll get to a bunch of viewer questions because I have a whole bunch of those. Of course, I'll keep this up here until May 9th. So you guys have a few more weeks left of this one. I am going to be in San Francisco giving a presentation. And if you you have to come to the presentation per se, but if let me know if you're going to be around and maybe we'll try to connect. Again, I'm only going to be doing one presentation. It's going to be not early, but I think 10 o'clock is when I do it. And I fly out, I believe, at 7 o'clock. So I have between like noon and 7 to kind of wander around and do shows and talk to people. So register for that one at moneyshow.com. And I can even put the link in the chat if needed. All right. Start with the core PCE price index. This is probably the first one. What a first week of trading off a trade copier. You're using a trade copier, Skilled Stocksman? You, of all people, using a trade copier? I wouldn't think you would be doing that. Why trade somebody else's copier? Why trade someone else's trades? You can do it all by yourself without paying someone a fee. Anyway, I'll stop that rant. Let's go to the economic calendar. Here is your Forex Factory looking at Friday's reading of the core PCE price index numbers. This, as we know, is the most important piece according to the Federal Reserve. It came right in line with expectations. And for me, I was a little surprised. I kind of felt we would see it tick up just a bit because the last CPI reading was much higher than expected. Although that says that we trust this data and we believe the information that's being released from these agencies. All in all, markets rejoice. Remember, we had 3 major pieces hitting our market today. It was core PCE price index numbers right before it opened, and then, of course, the Google and Microsoft pieces, which extended from last night's trading session. And that was it. It was just bringing the positive sentiment from last night's trading session carried through. And again, I'll look at the markets overall. I guess with this, what it means is the upcoming FOMC meeting takes a little bit of pressure off the Fed, right? Of course, raising is off the table. But next week's announcement will probably, and I think it's about a 94-95% probability at this point, is that we're going to see rates stay right where they're at on hold again for another 6 to 8 weeks. So that's the general consensus. And I think I'm going to have Bill Addis on the program to address that and to talk about what his views are. I was speaking with him and he was saying, man, this whole stagflation thing is really starting to worry me. And I'm like, well, I don't know if we got it yet, but I think I'm going to bring Bill on next week to talk more about that. I know some of you love having Bill on, as do I. So I'm not sure what day that will be yet. I've left that open to him to pick a day for next week that he can come on. So all in all, right now the Fed not going to lower, not going to raise. They'll keep right where they're at. But a good inflation reading like we had today is a positive factor for all of you who believe they're going to be cutting by the end of the year. I'm in the one cut camp for the remainder of the year. We'll see how good that goes. One question that came in, which I thought was interesting, was on this next topic here, which was SpaceX. Now, we've had this discussion before, people asking me, is SpaceX publicly traded? No, it's not. Can you buy into SpaceX? No, you cannot. You can't actually go in there and buy shares of it because there aren't any shares. It's a private company. However, there are companies that have gone out and invested in SpaceX, and they can do it because they go in with big blocks of cash and they buy a little stake in it. There was an IPO recently, or I don't know if you want to call it IPO, but a company went public recently, which makes its business buying into privately held companies. So you have SpaceX is on that list. God, I can actually try to buy the or look up the holdings of it. But let's go take a peek at DXYZ. Right. So let me get away from my Google 5-minute chart here and go out to a daily, and we'll go to DXYZ. So this is the Dynasty Tech 100 fund, which is atrocious. I mean, this thing looks horribly bad. I believe this might be a SPAC. I'm not exactly sure how it originated, but this was brought to my attention about 2.5 weeks ago when it was up around that $70 mark, and it's like, whoa. And one of the interesting things about this is it holds a lot of these companies that think people want it. However, because it's really the only way the retail public can get involved with something like SpaceX, it got a lot of publicity. It shot up in price. You know, your high price on this going back to April 8th was $105, and here we are right now, down 23% today at $18. Now, let me real quickly go out to bar chart and see if we can find out exactly what this one holds. I'm not sure if it discloses in their statement, but we will take a peek. DXYZ. We go on that one, and you can look at the constituents or components of it. Yeah, won't even give you the components of that one because it doesn't know, unfortunately. Normally it would have the components over here on the right-hand side. So there are ways we can find this out. It would take me a little bit longer than what we have here today. But basically what this is, again, it's a company that goes and buys into private companies. They become an investor in these private companies. So if you wanted to buy SpaceX, that's one of the ways you could do it. I don't believe that this is the only company out there that's doing it. It's just the only one that I know of off the top of my head. The question is, would you buy this thing? Well, first off, right away I would say no, I'm not going to buy this one, right? If I was interested, and I'm starting to become more interested the lower it goes, keep in mind the IPO price, which is over there, looks to be around $9, $8. That's probably what they expected it to be worth. So if it gets back down to $8, maybe I'm interested. If you are thinking about this one, and I don't want you to get excited and be like, oh, it's SpaceX, they're going to be the biggest thing ever, I'm just going to buy it. That's the wrong approach. The right approach would be to go dig deep into their financials. Because they're publicly traded, they will have to disclose the ownership numbers, and maybe next week I can do that when I have some time. But looking into what do they hold? It's not just going to be SpaceX. There's going to be several other private listed companies or private companies that they're invested in. And what are they invested in? Are those really high risk businesses? Are there ones that offer great reward potential? And then maybe if after that you feel it looks worthy and the financials make sense on this company, then maybe you buy into it. I'm not that comfortable with it. Andre says, is there not an ETF that invests in a basket of private companies in the US? I'm sure there is. But there's thousands of ETFs out there, Andres, and I don't usually follow private equity ETFs. Remember, for what I do, I'm looking for the very liquid, heavily traded, diversified things for my bulk of my option trading. Then I'm looking for ETFs that are in segments that I like and I feel like there's growth, or maybe it's been beaten down and looking to buy into. That said, I was going to say, I generally don't like buying into individual securities and holding them for the long haul right now because I think it's just a little bit too risky. That said, right now my portfolios in almost all my accounts are in individual securities at this moment in time. So I feel like I'm kind of a hypocrite with that one. Starlink, are they in that one as well, Oliver? They might be. I'm not sure. I haven't looked at it, but it was a question that was brought up, and I was like, well, I don't know if I really feel comfortable with this one. How's the volume on that one? Good question, Margaret. We can look at this. And my guess is it's not going to be that robust. Today was 3.7 million, but if you look at yesterday, you were under 1 million. So this clearly got some pump from some institution. I'm sure we could go back and look at a press release or a news article by somebody on, you want to buy SpaceX? This is how you buy it, the Destiny Tech 100 fund. And then it comes crashing back down. And this is just, the perils of something that's brand new and just gets a little bit of publicity and everybody thinks this is the only way to buy into SpaceX. It's not. There will be other ways to do it. If I have some time this weekend, which since I'm finally home for the weekend, I probably won't have time. I'm going to be going out and doing some fun stuff down here in SoCal this weekend. But if I can get a little time set aside, I'll look into all the different ways we could buy into companies like SpaceX or Starlink or different companies like that aren't public, that don't use a SPAC. I really want to stay away from SPACs after having witnessed what's gone on there with the SPACs. So I didn't remember who sent in the question on SpaceX. It's been a whirlwind for me the last few days. But what I can tell you is DJT did not go below 18. So I owe Mike LaRusso another beer. This is 2 beers. First off, he got me with the 49ers against the Chiefs in the Super Bowl. I gave him 2 beers for that one. And now it looks like I'm going to owe him one more for the DJT. I said it was going to break below 18 at some point in the last 30 days. It did not. Got all the way down to 22. Had a nice little pop-up over the past week. So congratulations, Mike. You're taking me for a loss here. I'm 0 for 2 against you. Not liking those statistics. All right, let me go into a little bit of a market wrap up, and then I'll go into. I have like 3 or 4 different listener questions I want to get to. So our market wrap up for the day, it was actually pretty good. We'll start with the worst and go to first. There you are, Mike. I knew you were here somewhere. We'll go from worst to first. Worst being Bitcoin yet again. There is a lot of chatter going on in the industry right now about USDC, which is a stable coin, and a lot of that has moved over to Coinbase. And the belief actually is that at least this is what I'm reading and hearing, is that this $100 million worth of USDC stablecoin, which has moved back to Coinbase from someone's wallet, is now going to be used to be buying some other assets, altcoins, Bitcoin, Ethereum, whatever. And some people looking at it as a very bullish thing. Others believe it might be cashed out and then going back into fiat, which I guess has caused people a bit of a panic. The other side of this negative air that's floating over cryptocurrency right now is that the SEC has gone after Consensus. That was several weeks ago. Consensus was founded by one of the founders of Ethereum. And of course, the big drama right now is Ethereum a security? The SEC is suing Consensus for all kinds of different things. In a interesting twist, Consensus, which has a lot of money, Joe Lubin, who runs Consensus, at one point got 10% of Ethereum, which was multi-billion-dollar market cap. Let's see what the market cap of Ethereum is today. I don't know off the top of my head, so I apologize for that. But let's go to coin market cap, and I'll show you here real quick what it is worth. And I don't believe he still has 10%, but you've got something that's worth $383 billion market cap. Wow. $383 billion market cap. He had 10% of that at one point, which would be $38 billion. I'm sure he's got some of it left, which means he's probably a multi-billionaire at this point. Consensus flipped a switch today and basically sued the SEC. Sued the Securities and Exchange Commission, which I think is very interesting, and it's refreshing to see. I was unfortunate enough to be part of a lawsuit with a federal agency, and if you don't have tremendous dollars and the best lawyers in the world, you'll never win against these companies. You'll never win against a government that's suing you. However, if you look what happened with Ripple, Ripple had billions of dollars, and they pretty much won that court case. You look at Coinbase. Coinbase has been doing very well in their litigation with the Securities and Exchange Commission, and they also have BlackRock, Goldman Sachs, as well as a lot of big money investors behind Coinbase. So here comes Consensus, which most of you probably have never heard of before, which is kind of one of the developers building products and infrastructure around Ethereum to help that ecosystem grow. They're now going after the SEC and suing them because, look, we're not a security. You may have seen something else where they're actually going after MetaMask. Now, for those of you who may not know, MetaMask is just simply a wallet. It's a place for you to store your crypto. And the SEC is now saying that MetaMask is, and I quote, a broker-dealer. So you're telling me that a wallet, a place where I keep my cryptocurrency, is a broker-dealer? That's ridiculous. It just shows me clear lack of understanding, which is remarkable given the fact that Gary Gensler taught cryptocurrency and digital assets at MIT, which is embarrassing to us that teach cryptocurrency. I am certainly one that likes to discuss cryptocurrency and its advantages, but I'm also big to discuss its disadvantages and what the problems are with cryptocurrency and digital assets. It's not 100% great stuff. There's bad things out there for sure. But to listen to Gary Gensler pontificate about how crypto is bad, it's just remarkable from someone who actually taught this at university at a high level. Yep, the small guy not only can be out-lawyered, Margaret, but they can be. The thing with what happens with a small company is the SEC or any regulatory agency will just keep pushing and pushing and pushing, and they drag that case on as long as possible and just bleed you to death financially. it gets so expensive to fight these court costs that you can't survive. And ultimately, you just have to settle out of court and be done with it. That's how governments win lawsuits, is they just drag it on forever because every day is more lawyer costs, more lawyer costs, more lawyer costs. And the SEC's lawyer costs are salaried. They're employees. Whereas, if I were to get sued by the SEC, my business would be done. I'd have to shut down right away. There's no way I'm going to afford court costs. But when you've got billions of dollars like Ripple or Consensus, you can actually stand up to the man and say, screw you. We're tired of this, constantly pushing us down. We will fight back. It's great. I think they're starting to get a taste of their own medicine and some pushback here. Hopefully, not only will it come from Consensus and Ripple Labs and Coinbase and other big companies like Binance, but it will also come from our government and our elite regulators that go out there and say, hey, we'll pass laws for the SEC that prevent them from doing what they're doing. And I think that's what needs to happen. It's really a bizarre situation right now. It leaves me scratching my head a lot going, I don't trust government. I think it's a horrible structure we have in the United States, just because it seems like most of them are self-interested. In this case, what we're looking at is people who are being told what to do by people who don't have a clue. That's the part that blows me away. I want to vote on what my tax goes towards. I would do too, Lisa. I love to vote on what my taxes go towards. Would absolutely love it. Oh, man. I would love that one, but unfortunately that doesn't work that way. Margaret says, Jim, I think Biden answers to the White House now. I think he answers to specific people around him, Elizabeth Warren being one of the major ones. With regards to this, with regards to cryptocurrency digital assets, I think that Biden is straight leaning on Elizabeth Warren for what he believes is to be accurate information. And if you read some of the stuff that she has released and talked about, she doesn't know what she's doing, just like she's Native American Indian, right? Bravo. How'd you make that mistake? Yeah, I'm Choctaw myself. I mean, come on. You got to know what your ethnicity is. Big Bry. Damn you, Brian. No, my book is not being worked on. I've got so many things going on right now. I'm trying to make a highlight reel. If anybody here's got some good video chops, I'm trying to make a highlight reel of all my power trading radio stuff, all of the TraderMerlin, as well as a lot of the video production projects I've done in the past, just in case I want to try something different here in the near future. So that's what I've lately been working on, is trying to get a nice reel done for myself so I can maybe shop it around a little bit. Let's see. What else I got here? That's how child support. Puppet Genzel, no surprise. Nope. Wait a minute. That's terrible. You might as well sue Trust Wallet if they're going after... sue them all, Oliver. Sue anything that can custody cryptocurrency. So sue Coinbase for their wallet. Sue Trust Wallet, Atomic Wallet, Ether Wallet. Anything that's a wallet that can hold crypto, you may as well just sue all of those for being a broker-dealer. That's just nuts in my mind. So that is one of the big pieces that's facing cryptocurrency right now, and I think that that's going to cast a little bit of a dark shadow. I still am of the camp. I know many of you don't want to hear this, but I am in the camp that thinks we're going to be going lower here on Bitcoin. I think it will drift lower here a little bit over the next month, and then we'll start to get a footing, and then 3 to 6 months out is when we'll really start to see things heat up, and then I think we'll see that big monster move. But I just if we get below that 61,000, then we'll see some lower. I think you need to do a video on whiskeys. I would love to be sponsored by a Centauri whiskey. That'd be great. Give me free whiskey from the vendors. Awesome, let's do it. All right, second on the list. After yesterday's nice pop above 4.7% on the U.S. 10-year bond, we got a little bit of a pullback today. Not too dramatic, down 0.83%, but still trending higher, looking good. I'm bullish on the 10-year. I know Big Ev's going, no, you're not. Let's go to crude oil, which also had a nice day yesterday, but just stalled out and hesitated today. Didn't do much. It was up 0.34%. Kind of in no man's land. You're in between kind of this low point at right around, call it 81.50, up to this area where it sold off from right around 85.50. So I feel like it's kind of stuck in this small little range right now. Nothing to speak of that's exciting with crude oil. Gold, however, still struggling. We had that big sell-off back on Monday, the 22nd, and then it just felt like it based. I thought with this hammer formation we got on Tuesday that we'd see a nice rally the rest of the week. It didn't. And notice the topping tails on today. Not just today, but Wednesday, Thursday, and Friday. You guys see those little 10 years? Or those tails? That's very similar to what we saw with the Russell. Let me make sure I'm on the right. No, it wasn't the Russell. The heck, what were we looking at that had the 3 heavy bottoming tails. One sec. It was the dollar index? There was one that had 3 really strong bottoming tails. Oh, it's crude oil. Crude oil has these really strong 4 bottoming tails, and then it started to push back up. And to me, those 4 bottoming tails were signs of buying pressure. Well, if you look at gold the last 3 days, it actually, even though it's been up, it does feel like you have those 3 long tails there. Sellers have been taking profits on any rally in gold here, even though it was slightly up today at 0.2%. So, again, I'm long-term bullish, but right now it feels like it's got some headwinds above it. Your dollar index, the Dixie, nice rebound and about face here. You're coming right up to that 106, 20 mark, which is an area where it sold off from earlier this week. So we'll see if we can get above that. Given the trajectory that's been going on since December of last year, higher highs, higher lows, albeit one small break of that. Still looking bullish, and I think we're headed towards that 107 mark. I think that's where we're headed. All right, podium time. No surprise that the major indexes were ripping today. Of course, that's because of Microsoft and Google. Take some of my lines off of here. I'll leave that one there. Ultimately, what we had was a day that did not have any follow-through whatsoever, right? If you look at this S&P, you've got a doji. The doji is where it opens and closes at pretty much the same price. So for today's trading activity on the S&P, we opened at 51.32. We closed at 51.31.50. So it was unchanged on the day. And that is a sign of indecision where people just don't know which way it's going to go, which is surprising given the fact that inflation seemed to be under control and in line with expectations. And we had great news from Microsoft and Google. You would think that there would have been a follow-through rally. For a large part of the day, it was really boring. I was jumping in there trying to find something to do a couple day trades, swing trades since I had some time, and I didn't really see anything on the S&P that warranted me to make a day trade in the futures market, so I shied away. Pepe, did you make anything on that NASDAQ today? NASDAQ, which is your number one market, up 1.5%, had a slight follow-through, but most of it was on the gap, right? From the gap price, it gapped all the way up to, on the open, you had 17,808. Your high price was 17,901. So not a real big move up there for the NASDAQ 100 at all, even though it was your better performing index. So your indexes all pretty much look the same. S&P, Russell, and NASDAQ in that order. NASDAQ number 1, Russell number 2, S&P number 3 for the day. All of that really driven by what happened with Microsoft and with Google, but I'm a little disappointed. I really didn't see any follow through there. Nothing was that exciting for me trade-wise today. As far as you did 0 day to expirations, as far as trades I made today, I did. What did I do? Oh, I did actually sell some. I sold some puts on Meta. I really wanted it at a lower price, but the premium just wasn't there. I ended up selling today. I sold some 415 puts on Meta. I really wanted the 420 or 400s, excuse me, but the premium just wasn't there. So I went higher up and did the 415s, which gave me. I forget exactly what it gave me. The beauty of having so many damn trades on. I'll look at the list here on one of my accounts to show you, to tell you exactly what the premium was that I got on my my Meta. But yeah, I wanted it. I was hoping this would have drifted a little bit lower so I could have sold those 400s. Unfortunately, did not get there, and it is what it is. But I did sell some puts today on Meta. I sold the 415s expiring May 15th, and just so we can get the entry price, so I know it off the top of my head. Meta, 429. So I got basically a little over, right around 1% for my Meta for the next 3 weeks that I commit myself to buy at 415, and I'm okay with that. Frank says, look for shorts on Monday. The chart here doesn't say that. The chart here, Joe, doesn't tell us whether we're bullish. It looks more bullish than it does bearish, right? The only negative things you could argue would be that the NASDAQ is coming up into the origin of this big sell-off move that happened on April 16th, right? Other than that, we are in a broader term big uptrend. Granted, we've had this nice pullback. If anything, if you're looking for a sell-off, it's that overhead supply level that you're going to run into at 17,884. You may look for that 18,000 level. If it gets above that, though, I think we'll be back to challenging those highs. So I don't see a candle or formation or supply zone that just screams go short on Monday. Of course, everything will take shape Sunday night. We'll get a better idea, but I don't have strong conviction this thing's going to go either way at this point. So I wouldn't be jumping the gun here and as Oliver says, wait after the opening bell. Yep, that's what I would be thinking as well. Okay, let me go to a couple of your questions after I have another sip of this delicious Centauri. Thank you, Carrie. And that is going to be, let's see, viewer questions. So I've got a few that came in. The first one is Michael G says, have you ever tried buying a call and a put at the same time in order to profit from the large gap up or gap down? Does this strategy work, or does Ivy Crush ruin the trade? So years ago, there was a thing on the trading floor where you could go long and you could go short at the same time. So when I was back on the floor in Irvine, California with all those 180 traders, you could go long in one position, and short in the other. And the general thought was, oh, well, all you'd have to do is just close out the one that's not working. And I really sounds silly to me. Bottom line is they banned that. It's called a box position. You're not allowed to have a long and a short position in the same account. Could you buy calls and could you buy puts on the same position in an account? Yes, you could. I have not. I don't see the point. Does it work? Could you make more? I guess you could. But I think that they'd be a net wash, in my opinion. If you're buying them, the offset will most likely not be worth it. But I don't know. That's not something I've ever done, nor would I ever plan on doing it. Tell you what, Michael, you could try that one, but document everything and let me know. Does he? Russell teaches this one? There you go. Not something I do. So you buy the same expiration. You're buying the put and the call at the same strike price, same expiration. Okay. Straddles and strangles. You know what? That's a guy who has not been on this show. Russ needs to come on the program. See if I can get him on. Okay. He's always the reclusive Russ Allen. If you're in that class, Ricardo, tell him to come on my show. I'd love to have him on. I'll reach out to him and text him. But yeah, I don't know. That's not something I do, Michael, so my apologies. I'm not that. No, yeah, I just don't do it. All right, next question was from Andres. This wasn't from Andres. Hold on. Oh, yeah, okay. Sorry, I didn't get how Berkshire Hathaway makes money through options. Would you mind to elaborate more on this? Sure. So pick a company, any company, and just say, this is a company that Buffett should buy. Just go ahead and type in the chat any company that you think Warren Buffett should buy, right? Just pick something entertaining. Go out there and say, I think he should buy XYZ company. And I will real quickly show you. Let's go to here and let's go. So while I wait for you guys to do that, I'll just type in WFC just because why not? It's a great focus class. Cool. I'm about to check that one out. I love Russ. Russ is awesome. This is really good. All right, well, I didn't see anybody type anything in, so I will go IBM. Margaret was first. All right, so I'll go over here, and I'm going to bring up the option chain for IBM. And let's say, going back to our discussion yesterday about Warren Buffett and his successor, right? What do you think will happen with Warren Buffett, with Berkshire Hathaway? I don't think anything's going to happen. I think it'll be smooth sailing. I think it might actually get better for Berkshire Hathaway because I think you might get some younger, open-minded perspectives versus the old curmudgeon. I mean, having Charlie Munger in your corner, oh man, come on. That guy, go pound sand. Just a weird guy that was. Anyway, let's say they go through the process and all the data is being analyzed by a whole team of people, right? I'm sure there's 100 people working at Berkshire that are analyzing companies in detail. They're talking to the CEOs. They're touring the facilities. That's the way Berkshire Hathaway works. It's like if I'm not going to buy one share, I'm going to buy the whole damn company. So he'll go out there and find a valuation. So let's go look at the price of IBM. And here's the price of IBM. Huge gap down on earnings the other day. Right now it's at 167. And let's say that Warren Buffett goes, you know what? I want to buy as much as I can. It gets to 160. That's the price that I think we're good at, right? That's it. 160. So Berkshire's number in their head is 160 for IBM. Now they could go to IBM right now that's trading at 167 bucks and say, hey, we'd like to buy your entire company to $160. Not going to happen, right? You're never going to see a company get bought at lower than their current share price. So IBM would come back and go, we're trading at 167. How about you give us 185 or 190 for all the shares? And we'll put a vote to our shareholders and we'll sell you the company. So what Buffett will do, twofold. Number one, he would go out there and find a level where he'd say, yeah, I want to buy this. So let's go look at the one. I only have the Yahoo account up here, so I apologize. It's not exactly the best options. Plus, it's aftermarket and on the weekend. There's going to be very little liquidity. But he would go out here and go to IBM, and he'd pull up the options chain, and he'd probably be selling monthly options on this bad boy. And he'll go out to the 160 strike price. Those calls. Let's go to the puts tab. I'll put them all the way down here. He'll go to the 160 put, and he'll be selling those 160 puts, and he'll be earning 99 cents per share to purchase this bad boy. All right, so he'll be buying it at a discount. Technically, it'd be $59 and a penny is the price that he'd be buying at if it fell down to 160. So if IBM never gets to 160, he'll just keep selling those put options at 160 and says, I'm going to buy it here. Now, let's say it finally does work out a deal. He buys a whole bunch of it, or he does go and he makes an offer that he's going to buy IBM. Actually, I'll do a second one since what was the second one on the list? NVIDIA. At least he's not going to buy NVIDIA. He doesn't understand NVIDIA, right? He's not a tech person. It was crazy to see him even start jumping into Apple. Okay, here's Gray Television, GTV. Now, Michael, I have no idea. Michael, you love bottom fishing, my friend. You're the king of bottom fishing. If you guys want to see stocks that are at their all-time low, just ask Michael. He knows. He's got a chart of a filter of everything that's trading at 52-week lows. Michael, if you didn't even have your name on the screen, if you just typed in GTN, I would have said, this is Michael. I know he's got this one. All right, so Berkshire would never buy this one. I don't believe they'd buy this one. But let's say he makes an offer and he says, I'm going to buy GTN for $6 a share. Right now it's trading at $5.60. They'll put it to vote to their shareholders or probably sell out. So what he'll do is he'll go here and buy it all at $6. Then what he'll do is he will go and he will sell calls against that position. He'll be selling calls far enough away where he knows it's not going to get there, right? Remember, Buffett knows all the numbers of the company he's working for. So let's say in his mind, he knows that Gray Television it's not going to get to $7 in the next 30 days. So what he'll do is he'll be selling calls against his millions of shares that he owns of this company. Now, I could bring up the options for Gray, but they're not going to be there. There's just no, well, let's see if there are options on this bad boy. Yeah, this thing is so illiquid, I wouldn't mess with it. But he could go out here, and he could be selling calls at $7.50 and earning 10 cents. Earning 10 cents on those. Okay? What about Amazon? I think that's too big for him, but let's do that same analysis. So he'll make money one of two ways. He will say, I'm looking at, let's use these numbers that I like for Amazon as well, which is I'd like to buy Amazon if it got to 160. So to do that, I could go out here, go to Amazon. And it's up to you, the duration. This is today. I can go out here and do May 17th, which is the monthly call option, or monthly options, and I'll go to the puts. And if I sold the 160s right now, you guys can see here, I'd earn about $1.63, which is just over 1% for less than a month. So this is a way for Warren Buffett to earn a rate of return on something that he doesn't even have to buy. Now, is See's Candy public indigo? I've never actually looked at See's Candy. Let me see. I don't think it is. No. Okay. So let's go to Amazon. Again, let's say that he does buy Amazon and he buys, makes an offer and ends up buying it at, $180 a share. He'll just go out here and he'll be selling calls against his stock price, but higher up where he knows it's not going to get to, because he doesn't want to get rid of his shares, but he's just adding extra rate of return on top of his position. And because he's got millions of shares, he could sell calls against those. So to make it easy, let's go out here and show you guys. Is it Guru? I think it's called Guru Market. Guru Focus. Okay? So if you look at Guru Focus, let me go here real quick and show you this one. Again, don't buy this. Don't subscribe. I don't think you need to subscribe to anything here. But I'll go to Gurus, and we'll go to Warren Buffett. You can see him right there. You got all kinds of different ones in here. But here is Warren Buffett. So I could scroll down here, and I could see some of his major holdings. So he has 1 billion shares. Let that sink in. 1 billion shares of Bank of America. Okay, so what do you think Warren Buffett's doing? Let's go to BAC. He's out there most likely selling calls against his position. Now, he's not trying to get like 2 or 3%. He's just getting a little bit extra. So right now it's at 37.83. What about selling the $40 calls against that position? What would he earn, or what could he earn? Right? We'll go to BAC. And most of my options people in here know this and know more about it than I do. But let's just go out and let's just do next week. So let's say these guys went out there today and sold calls against their position, right? And we just looked at Bank of America, and we thought 38 is where it's trading at. What about the 40s by next week? So I can go out here to the 40s, and these are the call options. You can see here the $40 strike price only makes them 3 cents. Well, 3 cents on a billion shares is still a boatload of money. Now, could they be selling it at closer prices, go to 38, and make a little bit more? Remember, if you move the decimal place over 2 points here, 3 cents is almost 1%, right? It's 0.75%, but that's for the next week, right? If you wanted to make 1%, he could go out here to the 39.50s. He'd make over 1% for the next 7 days. And 2 of those days are dead because it's Saturday and Sunday the market's closed. So really for 5 days of risk, he could make himself 1% plus over 1% by selling those call options for a nickel, but he's got a billion of them. Okay? That's how he's going to make that little extra money. And the deal for him is you're selling those calls at a higher price where you don't believe it's going to get to, and it just keeps drifting up, drifting up, drifting up. And if it does get there, let's say all of a sudden there's a huge surge tomorrow and it rips up and gets to 40, he'll most likely buy back those. He sold the calls. He'll buy them back because he wants to keep the shares. It's just a way to generate extra income on top of positions that he owns, which is something, honestly, that most people should be doing. All the positions that I am long in right now have calls sold against those positions, earning me another extra maybe 1% a month, maybe more, depending on the volatility. Which brings me to this question from Ashton. How do you calculate that 1%, Indigo? Okay, great question. If the strike price is $40, oh yeah, I'm sorry, you're right. You're right. I misspoke. Thank you, Indigo. 1% of $40 would be 40 cents, not 3 cents. So that was my mistake. So it's less. If you wanted to earn 1% on this bad boy, he'd have to sell the $38 calls. Thank you for correcting me, Indigo, that I made a mistake. That was definitely wrong. Typically, what I'm doing is taking the strike price, and I'll move the decimal place over 2 points. So if it's $38, 38 cents would be 1%. Right? That's how I measure it. Thank you. I hate when I make mistakes on air. You said yesterday that Warren does private option deals. I'm assuming, Margaret, because he's so massive. I mean, when you look at the list of holdings he has, he's got 900 million shares of Apple, 1 billion shares of Bank of America, 151 million shares of American Express, 400 million shares of Coca-Cola. This isn't a guy who's going out there and selling, 20 or 30 call options, right? He's selling thousands and thousands of them. And that's obviously outside of what Warren Buffett's doing. I will to bet you that there is a team inside of Berkshire Hathaway that is dedicated to just the selling of options. That's their job, is selling of options. Now, I don't know. I've never been to Berkshire Hathaway. But when you're dealing with that kind of volume, you either have a designated team within your company or you're hiring another firm to do it. So maybe it's going through Goldman Sachs or someone. I don't know that information. But I saw stats years ago that were jaw-dropping. It was probably like 6 or 7 years ago when I actually read this article that he made $6 billion in a year selling options. $6 billion. He made more with options than he did on the appreciation of his shares of stock. That's impressive. Is he still that active today? I don't know. I would imagine he would be. But, when you have these kinds of positions, there's a lot of opportunity to earn extra yield. And for us who are trading, 100 shares or 500 shares or a couple thousand shares, no big deal. But when you're swinging 1 billion shares, that's a lot of options writing. A lot of options writing. Essentially, if you're selling options, you are selling insurance. And I made this point before. Insurance companies make really good money. they also have an actuarial department that understands the risk models and the risks to them of providing insurance for your motorcycle, your German Shepherd, your house, your whatever insurance you're getting. They're looking at all the data saying, what's the risk that it actually happens, that they file a claim against us. They're going to try to stay just out of that. And I think that that's our job as well as traders. If you have positions, many of you who have positions in your 401k, IRA, or just holding some stock you like, why not sell calls against that? It doesn't have to be competitive. For example, I could go back to this Bank of America and, selling the $40 calls for next week is not going to make me much money. What if I go out 30 days? Let's change this a little bit here. This was for May 3rd. Let's go to May 17th, which will give you not 30 days, but, getting close to a month. If I look at those 38s, 73 cents. If I look at the 40s, 12 cents. So that's 12 cents per share. So each options contract I sell makes me $12. That's not a lot of money, right? It's certainly not a lot of money. But add that up over time, and that starts to compound, because then you can take that money and buy more of the stock, more of the underlier. It's a great way to increase your rate of return and compound it over time. Again, as I've mentioned this before, my 1% accounts, the two big ones I have, I'm striving for 1% per month, and if I can get over that, great. But my goal is 1% per month. If I can compound that and get a little bit more, fantastic. Generally, that's going to be done with those ETFs. So, yeah, that's it. So let me dive into this one, which dovetails into that conversation after another sip of this Suntory Toki whiskey. Ashton said, I don't understand why you sold calls on your Tesla shares if you thought it was going to go up. Why get rid of it? It's just a different way of thinking. So, Ashton, you're right. At the base layer, I like Tesla, and I think Tesla's going to do well over time. So I bought those 200 shares because I was exercising my options. Why not just keep it? Because I believe it's going to be going higher and higher and higher. The reason was, based off the earnings announcement, what I thought was going to happen was that Tesla was going to have that big jump up and then a little bit of profit taking. So what did I do? I looked at yesterday's market. Okay, so here's your Tesla. Let me fix this up. Here's Tesla's the big rally off its earnings, right? I sold right as it gapped up on the earnings day. I sold the 165 call options against my position. Now my average price of the exercise was 160, but I collected $3 worth of premium. So now my average price is 157. And when I sold the 165 calls against my position, I collected another $3.80. So now I've collected $6.80 worth of premium, which actually makes my average price, $6.80, that's going to be $153.20, which is right down here. $153.20 was my average price after both pieces of premium I collected. And I sold at $165. So essentially I made $12 per share on that one, even though on paper it looks like I bought at 160, sold at 165. Now, again, Ashton, what I believe was going to happen was that this was going to drift down a little bit, and I thought we'd close by Friday at like 160, 162, 163. I thought we'd close somewhere in here. And that was just a way for me to try to get a nice little added bump to my rate of return. Unfortunately, it ripped up. But if you think about it, I actually did pretty good. So let's say instead of taking the premium I collected off of the purchase price, let's add it to the target here, or where I got it called away, to see what it would be. So again, I collected $6.80 worth of premium. Add $6.80 to 165. That is going to be $173.80. And notice where we are right now. We're not there. So I actually made more money by selling the options on this one than I would have just holding it, even though it's higher than where I got out at, if that makes sense to everybody. So Ashton, I didn't really want to get rid of my Tesla. I just thought it would stall for a day or two. That's why I sold them expiring today. They're literally a 2-day option, but I got $3.80 worth of premium. It was great. Why not? So unfortunately, it got taken away. But if you think about the rate of return of that trade, where I collected $6.80 worth of premium, but I also made $5 on that. So what's the 680? Yeah, 680 plus 5 would be 1180. Excuse me, I made 1180 worth of profit on that one. I'm not going to complain about that. 1180 worth of profit on a 2-day trade. Not too bad. I'll take it. But that's why, Ashton, I wasn't expecting those shares to be taken away. I thought I was timing that market right, and I just missed it by a couple of bucks. So what? We'll do it all over again. Let's see. Do you think that you will ever be able to sell options on crypto? Margaret, you can sell options on crypto. So if you use DeFi marketplaces, you can go out. There's one called Deribit, but you have to use MetaMask. You most likely have to use a VPN to get in there because the US is blocking all this stuff. But I do see a day down the road when we do have options on cryptocurrency outright. And, look, Bitcoin is now becoming much more accepted. Pretty soon we'll have custody of cryptocurrency at banks. I think that's going to be the next piece to drop in a couple years, where Bank of America will custody your Bitcoin for you. At some point, the regulations will become clearer, and I think we'll have options on Bitcoin. Soon, in another few months, we'll probably have options on all those spot ETFs as well, so that's kind of a surrogate for that. But yep, options on IBIT. Yep, exactly, Indigo. Down the road. Not yet. I think you'll get them here soon. You said yesterday Warren does private goes down. Dividends pay and options premium can make a decent ROI at just yeah, exactly, Joe. That's my thinking. If you talk to any financial planner out there, they'll tell you that the average historical rate of return for the S&P since the 1950s is between 8% and 10%. So if you just buy the market, you'll get between 8 and 10% per year. Let's call it 9%. Well, if you got 9% on average, that means you're going to have years where you're down 10, 12, 20%, right? You're going to have these big ebbs and flows. But with that 1% account, you can circumvent the drawdowns, and down years you're still going to get 12%. So to me, it's a better way to consistently earn. And of course, there's been years where I've done way more than 12% for the year, way more. I think we looked at last year was like 30 something percent. Great. Those are what I'm really striving for. Plus, it's compounding. Every time I'm getting that account bigger and bigger and trading more and more. So I'm definitely a big fan of that 1% strategy. The wheel strategy, I think, is a really good thing. It takes some patience, takes some time to get used to. And on days like today, which Margaret asked me, what sort of things are you looking for? Show me some setups to sell puts. It's hard when everything's ripping to the upside. In my 1% account, I have nothing open right now. Which bothers me. I want to find something, but I'm not going to force myself. If you look at the list of securities that I usually look at for my 1% account, you guys tell me. Let me just zoom out here a little bit. Here's XLU. Do I see anything that looks like a nice volatile sell-off day that I could potentially get some good premium? Nope, not on XLU. How about XLE? Not really. I actually think I may actually look at the 94s next week on this one. I hope we'll get a little bit of a sell-off, because I am bullish on energy. Financials actually had a decent one too, right around 39.50. You got healthcare, which has already been a little bit weaker in the markets, and maybe the 138. You probably get some good premium at that one. Industrials, most of these still look pretty strong. I don't see any great demand zones. Real estate, I don't feel comfortable touching because I believe it's going to be going down from here. Sell puts when everything is going up. That's the hard part, Indigo. It's hard to sell puts when everything's going up. I want it in an uptrend. I want the market in an uptrend, but I also want to get good premium. So when the market looks like this, there's not a lot of premium for puts. On big down days, that's when you do well with the puts. And unfortunately, we haven't had any really strong down days. You saw the big sell-off happen back here. I would love to have sold some puts there, and I regret that I didn't, but I was also in Las Vegas partying and not thinking about the markets whatsoever, which we need to do occasionally. So unfortunately, fish cost me a lot of money here, because this would have been an area where I would be selling some puts and getting a lot of premium for it for just a few days. So I'll get my day. I'll get my day in the sun. The market will sell off, but there's been just the markets have been really strong. Now here's consumer discretionary. You've got building materials. You've got the Dow, real estate. They're all look great. There hasn't been any great premium, but hopefully I'll get some here in the next couple weeks. You sold some bits. Okay, because BITO is the old one. BITO is a futures ETF, right? That's the Bitcoin strategy. And it's been there so long, he sold some puts on that one. Okay, that you could do, but with the spot ETFs, they're not there yet, I don't believe. All right, let's see what else we got. Do like hog, which I think pays a dividend. I don't care about dividends, Michael. This is not that's not my style at all. Harley Davidson, man. I will tell you, this is the type of thing I like to look for. Does anybody in this room believe that Harley Davidson's going to go out of business? Not a chance, right? Not a chance. They may be run poorly, they may lose money, but someone will come in and buy that brand. That's one of the most indelible brands in American icon history is Harley Davidson. So they're not going to go away. The fact that they're down 21% in the past 20 days is pretty impressive. Does it mean it's over? No. Does it mean that we could sell some puts here? I mean, you might get some great premium on puts at this $33 mark. So let's just go look at hog here real quick. And I'm not even considering the dividend. Just so you know, I don't care for dividends. They are what they are. It's not my thing. Let's go and look out. If I go to May 17th, so go to next month's options on this one, we'll look at selling some puts. And the chart right there, we're saying if you go real close, you could do 34. I'll do 33 myself. So let's say 33. What premium could you get for that one? The 33 puts are going to get you 40 cents, which is over 1%. So I may actually look at this one next week, not in my 1% accounts because I can't do individual securities, but I do have other accounts where I might actually look at selling some puts on Harley Davidson at $33 and do that for May 17th and collect that over 1% premium. And if I get Harley Davidson, fine. I'm all right with Harley Davidson. I'm not going to buy one. I lost my motorcycle license. Man, there's the worst test in the world is the motorcycle test. It's crazy. I had a motorcycle license for a long time and ended up losing it. So, all right, Marcus says, are you looking for a stock to be down by a certain percentage when you sell it? No, I'm just looking for... If you haven't gotten it from this program yet, you should know this. One of the things I love as a trader, and this is not as a human being, only as a trader. Outside of trading, this does not apply. Please don't think a bad person of me. Inside of the market, between this chart right here, when I look at these things right here, what I love to see, what I salivate over it, is pain and suffering. When I see markets crumbling and imploding on something, you know shareholders here are like losing their freaking minds because it went from $40 down to $33 in 2 days. This is agony. This is absolute pain for people. I love it. I love it because what it means is it gives me an opportunity to buy a solid company. Well, I can't say solid because I haven't looked at the fundamentals, but a company that I know will not disappear. Harley's not going to disappear. There's no way some company would buy them and take it over and make it better. So I'm not worried about Harley. So I'm okay buying Harley Davidson. And if I liked Harley Davidson, why not just buy it at 40, 42, 43? I'd rather buy things at a deal, right? The type of person I am is I'm a couponer on steroids. So for those of you who go grocery shopping, right, you get your weekly ad. Let me give you one little golden nugget here. If you take away this one for the weekend, this is the golden nugget. Wherever your grocery store is, most likely they have an app that you can download to your phone, right? So there's a store here called Vaughn's. I need another sip of whiskey for this one. There's a grocery store here called Vaughn's, and they have a great ad. And every week they release, there's always something on sale, right? So let's just take ice cream, for example. It's usually, you got Breyers, Haagen-Dazs, and Ben & Jerry's are like the big three. And I swear they rotate them every other week. So this week, it's Breyers. Last week was Haagen-Dazs. The week before that was Ben & Jerry's. Ben & Jerry's is $6 a pint. And all of a sudden that ad comes through and it's $3.99 a pint. Of course, that's the time to buy, right? You know you're going to eat Ben & Jerry's. Do you want to pay $6.99 or do you want to pay $3.99? So it goes on sale for $3.99. That should be a good deal, right? If you use the apps that these stores provide you, there's usually a section in there called Just For You Deals. And what happens is by using that app, that same thing of ice cream will be $2.50. And the only way that you can get it is if you use the app on your phone. So I have a competition where we're trying to compete for who saves the most on our grocery bill. So if I need mayonnaise, I will only eat Best Foods mayonnaise. That other stuff is garbage. I don't know why Best Foods is it, but if I need mayonnaise, I look on the ad and I will wait for it to go on sale. That's who I am. I'm not going to spend $6 for a thing of mayonnaise, but if I can all of a sudden get it for $2.50, chalk me up. I just saved money. Is that not the same thing here? Yeah, I like Harley Davidson. I think it's a great company. I love Harleys, by the way. I love the bike, but I don't want to pay retail prices for it. If I can now buy this thing 25% lower, I'm in. To me, that's the same analogy for everything we do in life. Try to buy at a discount. So Margaret, if there's not a set percentage where I say, oh, it's down 10% or 5 or 6. I just look for, is it down substantially, and has there been a pain moment? Has there been that, kick to the groin moment for investors with like, oh God, that hurts? That's what I want. And then I line that up with a demand zone. Now, granted, this demand zone down here on Harley Davidson is not great. This is not a great demand zone. But it is the point where it had a huge market turn. And notice where it turned on Thursday. Right at that point. So this is that point where I'll buy it here. I would have sold, if I watched this one yesterday, I would have sold puts. And I'll tell you something I do, not in my 1% account, but in my more active accounts. What I do is I go here to this little fireball, and I just glance real quick at the biggest losers for the day. Now, most of this is crap. 99% of the time, this stuff is garbage. I'm not going to touch this IMAC holdings. I'll show you the volume. Right? These guys have such low volume. You can't even see it on this chart. MFI, right? Most of this is garbage. But if I see a major household name, like your Facebook, Meta, Amazon, Google, Microsoft, Intel, AMD, I see a big name of a big company that I know is not going anywhere, and it's now down 30% off some panic selling, I'll look at that one real quick and say, maybe I'll buy this at 25% discount. Because if it does continue to go lower, I'm not taking as much of a hit as that person that bought it 25% higher, if that makes sense. So, Margaret asked the question, can you go over some option selling strategies? That's, from a put selling perspective, that's all I'm really looking for. I'm looking for something that, I believe is going to be going up over time. That's why silver's been my go-to for the past few years. I've been bullish on silver. It's been going sideways, which is even better because I'll buy it and be selling calls against it, and I just keep generating that premium. There you go. Does the reason for the big drop matter? Of course it matters. Of course it matters. And if you look at this, it was probably bad earnings on Hog. Let's bring up HOG again. So yeah, there's your, look at the volume on this. It was 10 million, which its average, it seems to be, average volume, yeah, it's about 1 million, and it did 10 million that day. So its earnings, they beat earnings. Or they actually came in line with earnings. Excuse me, they beat. They expected $1.50, they came out at $1.72. Their revenue increased from $1.35 billion to $1.47. So this was a win-win for HD, or for Harley Davidson. My guess is they probably lowered their forecast going forward, right? They lowered their up there. Yeah, Michael says it, which is fine. Are they lowering their forecast by 25%? Because that's where I'm buying it at a discount. So yes, Margaret, it does matter. Michael, of all the ones that you have mentioned to me, of all of the symbols that you have talked about, this is probably the only one that you've shown me that I'd look at and go, I'm okay being a buyer at $33. And I might back that up with some action on Monday. We'll see what happens on Monday's price action, but I'm okay owning at $33. Now if we look at the longer term picture here, Harley Davidson really has not done much. It's been traversing sideways. So that's not a good sign. But it does, I'll sell the puts on this. If I get exercised at $33, then I will just look at selling the calls against my position and continue to lower my cost basis month after month after month after month. And if I stay in this thing for a year or 2 years and I keep selling calls against it, great, fine. You might remember with that SLV, I told you guys what happened with this SLV. I've been selling calls against my SLV. I sold the $23 calls, and what day was that? It was this day right here. It closed at $23.04. It was like 4 cents above, and I sold the $23 strikes. Shh, quiet, John. Oh, dang, it's already 3 o'clock. Guys, I gotta go. I should have had those shares taken away from me, but somebody didn't want them. And so what I did is I immediately sold the 23.50s. So I got another 50 cents worth of premium on my 8,000 shares of SLV, right? I got extra 50 cents worth of value on the underliers, which is $4,000. Plus, I collected the premium that I sold those call options for. And that was another over 1%. So am I disappointed I didn't keep my silver all the way up to 27? Yeah, absolutely. but I just keep selling calls against it and lowering my cost basis. So there you go. All the upgrades and downgrades around 45 and 50 area. Yeah, Michael, upgrades and downgrades are scams. Upgrades and downgrades are BS. They're junk. They're trash. They mean nothing. An upgrade is done by a company when they want you to buy, and they're trying to convince you to buy it. So they're using this as a manipulation tool. A downgrade, exact opposite. It's a manipulation tool to convince you to sell something so they can buy lower. Don't look at upgrades and downgrades. You're just being manipulated by the institutions that want you to perform an action, right? It's like screaming fire in a crowded theater. You want the best seat in the movie theater? You want the best seat? Just start screaming fire. That place clears out, oh, you get the best seat. That's what they're doing with upgrades and downgrades. They are a scam. They're total BS. Leave them alone. Don't even look at it. Ah, damn it. 1 hour show. All right. That's going to do it for me, guys. Monday. There's really nothing happening on the earnings front for Monday, but I will show you your economic calendar because there are some things happening on the 29th. So let's bring that one up here. And I'm going to get out of here and go to the dog park for the first time in weeks. Looking at the news for the world, there's nothing going on with the U.S. market. So it'll be a calm digesting all the last week's information. If you're trading the British pound, you have the BRICS shop price index. You got some unemployment numbers coming out for Japan, but that is pretty much it. And then on the earnings front, there are some companies. Let me bring that one up here real quick. I didn't have that one prepared. Well, I did, but I moved on to something else. Why would they give you free buy and sell advice? Correct. They're absolutely manipulating you. Anyone who does not know that doesn't understand the markets. Honestly, you have to know that you are just a cog in the wheel of manipulation. They need you to buy, they'll issue an upgrade. They need you to sell, they'll issue a downgrade. And they'll be the ones on a downgrade, they're the ones buying that day. On the upgrades, they're the ones selling that day. It works all the time. You got Welltower, you got Transocean, Logitech, you got On Semiconductor, I think you got NXP Semiconductor as well, and that is pretty much it. All right, that's going to do it for me, guys. I did not plan to do an hour show, but here we are. Been an hour show. Next week, I'm hoping to have Bill Addis on the program. I will be recording in my studio a lot of videos next week, so I'll let you know if I'm going to miss any shows. I will do the Monday show, even though I know I'm going to have Todd here recording. He's going to hate that, but I'll tell him to go to lunch during that window of time. It might be a very short show on Monday, just setting you up for that one. But I will see you guys. Yeah, thanks, Bri. I'll see you on Monday Morning Must Knows, which will be released on Sunday evening. And hopefully you guys have a fantastic weekend. Go do something fun. Enjoy our time spinning at 1,000 miles an hour on a little ball in this giant universe that we call our galaxy. Thanks, guys. Have a fantastic weekend. I will see you on Monday. Take care.